This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have with me again this morning Charles Hugh Smith, well-recognized and prolific writer on the web, who is also the publisher of the website up2minds.com. And welcome back again, Charles.
Thank you, Gord.
Charles, earlier this week we discussed a delusional and dysfunctional state, and I thought today we would follow it up with another group of articles you wrote that I pulled together and I captioned it, "Rest in Peace, Our Expansionist State." I know you brought some slides, and I wonder if you could take us through them this morning.
Well, Gordon, I know that you and I and your other guests spoke at length last year on statism and the dominance of the central state over the economies of the world. And you've prepared a long paper, which I encourage people to read on statism. And this is, you could say that what we're really talking about is one aspect here of statism. And I think the point that I want to make to start is that the state, what we call the federal government, but is generally in political science called the central state, it's been expanding its share of the economy. In other words, it's like if the economy has doubled, the state has not just doubled, it's tripled. And so what I have here is a chart that overlays total federal government expenditures as a percentage of GDP, the gross domestic product. And so what it really does is it charts the expansion of government, because the government is growing faster than GDP. That's what this is saying. And it's growing considerably faster. And it has been following this trend line since the 50s. And there were two brief periods when GDP grew faster than the federal government expenditures, and that was the web boom in the late 1990s and the housing bubble in early to mid 2000s. And so those were anomalies, one-offs. You know, you're not going to, you can't rely on huge speculative bubbles to grow your economy. Those are rare events.
That doesn't seem to be that rare anymore. We seem to move from one bubble to the other, which seems to be the only growth we get. Illusional growth.
No, that's true. What we have is we have what I call an expansionist central state. And I think that this is true of all developing and developed economies around the world. It's really no different if you say China or socialist France or so-called capitalist US. Everywhere the state is expanding its share of the GDP, its share of the national income, and its control of the economy. What this leads to is it leads to a structural imbalance between what the state is spending and promising it's going to spend in the future and the revenues that it collects. In other words, if you grow the government spending at a much faster rate than the underlying economy, then your revenues are never going to be able to keep pace with your spending. And this is what this chart shows, that there's now this gigantic, stupendous $1 trillion plus gap between spending and revenues. And even if revenues are trending up slightly, spending is going to grow even faster as all these promises that have been made for entitlements and military spending and so on and so forth will rise much faster than the taxes collected, because the taxes are collected off the real economy.
What I see in this chart is the fundamental flaw within our financial system. The system was designed for those who deal in debt. In our system, the only way that money can be created is it has to be lent into existence. It's only by creating debt that money actually appears. That's different than just printing some currency, but money evolved. That is, for example, a bank lends 10 times more than it has in terms of deposit, but more money is always created by increasing the debt. So what happens is you have an interest payment every year on that debt, and the more debt you have out, the more interest. But even if you have no growth, you've still got that debt. that interest that's got to be added to it. So what we've been going through is this, and to go back to this chart of how I see it differently, this flaw, and additionally, we have debt saturation, where debt is now such a large percent of our economy that our economy can no longer support the debt payments. So we have non-performing debt through bad assets, malinvestment. So we've had this, and everybody talks about deleveraging. Think of it as bad debt going bad. Now, when that happens, you have, as I said, you have to have money can only be created by lending it into existence. Money is destroyed is if debt goes bad. Therefore, it's got to be paid back. And so that money comes out of the system because it suddenly disappears. And so the only way you can make it up is on this red chart. The government money that's being spent has to be disproportionately higher to offset the crushing amount of debt that's going bad or is being deleveraged. Now, we've done a phenomenal job of spending way beyond our means to bar this up. Hopefully, apparently, the Keynesians would tell you it's going to create growth. That's horse donkey, because that hasn't been the case for years. The amount of growth that you get out of dollar of debt now is barely positive, so those days are long gone. So we've taken it to the limit of what that government money will now create, and that's why that's had to be this big. Obama had no choice. He had to create, if you would, excuses to spend larger and larger amounts of money to offset it. But that gig only lasts a year, 2 years, 3 years. We're at 4 and 5 years. This is going to implode now.
That's a very good description of this dynamic of debt saturation. And if we move to the next slide, we can see that in the S-curve chart that I've prepared here. An S-curve usefully describes a lot of different things in nature. It's like the everything from the spread of a virus through the population to the spread of the new operating system or a new piece of software, is that there's a period of slow development and then a sharp ramp up and a quick expansion and a quick spread through the population or quick growth. Then there's a sort of leveling off maturity phase, and then there's a stagnation and then a decline or collapse phase. And so I think we can usefully look at the entire central state as following an S-curve, that when, say, if you go back to, like, say, the early 1800s or even after the Civil War, the mid to late 1800s, when the government spends money or devotes national capital to expansion of infrastructure, like, say, the railway or, the plumbing of the internet or the highway system, these kinds of investments pay big dividends. They encourage trade, they encourage innovation, and there's a big payoff. And but then as the government starts spending more and more on debt and on things that have diminishing returns or diminishing yield, like, say, healthcare, then we've reached the stagnation point where the government throws more and more money at stuff, and there's no appreciable yield. In fact, we've got a negative return on that. And then as the whole economy starts breaking down under the weight of this inefficient, malinvestment central state, and so then tax revenues decline along with the real economy. Meanwhile, the government spending continues in a straight line up, and then you get collapse.
As you said, Charles, this chart reflects really the whole state of the natural order of both societies and nature itself. We look at even the physical forms of species, evolution, or whether we're talking about DNA, the mind, or whatever. And to me, it's the difference between what I call the node versus the hub. Years ago, we used to have something in data processing where we had centralized data processing. You needed more resources and more delays, and it was more complicated. And the best thing to do was distribute it, and these little PCs took off. They couldn't do much, but suddenly you could string them together. And so this distributed was much more powerful and took off, and that is a whole discussion in itself. But I'm trying to show it's a physical and a natural order of things. Let's talk about the internet. The internet works because in the pre-internet days, everything was kind of a hub. Everything had to go to a central place or a central switch, and then it was passed to another hub. And then it kind of moved around that way. What happened with the internet is we created nodes. And so suddenly those nodes could be, and think of it in like a neural science, it's the same thing. Through using statistical multiplexing, feedback mechanisms, alternate routing, all this technology such that you don't even know how the data moves on the net, nor does anybody, in terms of how the dynamic routing is working. So if one fails, it goes a different way, but somehow the data, even the packets themselves will go different routes. The point is that systems can only grow and centralize to a certain level, then they can't work anymore. And then they evolve and they split and they have to distribute and they break out. And what's happening and why these systems fail, centralization fails, is the same thing. It becomes too top-heavy, too bureaucratic, too many policies, too complex. That's what's happening in our society because of globalization today. Instead of governments getting bigger with more control, you actually have to figure out how to push everything down and distribute it out. That's absolutely 180 degrees to government thinking. They want to get more centralized, more control. But they'll implode. They always do. Didn't we see this in Russia?
That's an excellent dynamic that you've just, a very powerful dynamic you just described, how centralization runs into like diminishing returns.
It's the natural order of things. It's not just finance. It's just not economics. It's the nature of complexity. And if we can learn, if we could just learn from this. And by the way, when you don't do this, these things become fragile, they're not robust, and they fracture. And that's why we get crisis, because things break. And the longer we sustain it, the more something's going to break.
Absolutely. And so maybe we move to the next slide and we can talk about why is centralized planning and centralized spending, why is it yielding marginal returns and diminishing returns? And one dynamic is that when the government collects money and then distributes it, it's intrinsically a political process. In other words, the market doesn't decide or the community doesn't decide. It's like a highly centralized political decision making as to how much money is thrown at the military, how much money is thrown at healthcare. And so what happens is that as a business person, you're inevitably drawn into lobbying the government because now the government controls so much of the economy, so much of the money, so much of the debts, and so much of the regulation. So you're really forced into making business decisions based on what the state is doing in terms of its policies and spending. And then so what the ultimate result of this is the expansionist state ends up distorting the investment decisions of the entire economy, the household, business, the public, and the private sectors alike. And once that's distorted, then bad decisions result.
I see it as problem is kind of like top down versus bottom up. And from a governing standpoint, we have the country, then we have the state, then we have the city, and then we have a town. So we have a triangle which works down. If you really look at it, most of the work is all done as you go down to the bottom of that triangle, done at the town level, the city level, and then up through the state level. The federalist government was always just there to protect us with an army and to allow the state for us to be stable as we all went out and did our work. But so that's the way the system is governed. But what we've done is we now have it where all the money is collected at the highest level, the state. So what are their responsibilities? Their job now is to pass the money down the pike to the states and move it down, and it doesn't flow. Where the money goes out is it goes out to the crony capitalists, to the military industrial complex, to the security surveillance complex, to the financial complex, to the fire insurance complex, etc., that are feeding at this public trough, because we've got top-end revenue collection and bottom-end responsibility. And it's part of my internet analysis here, where we distribute it with the node. Wealth needs to be down where it does the work, at the bottom end of the triangle, not at high end.
Yeah, I totally agree with you, and why that's true is that it's at the bottom that people know where the money will actually yield positive results.
Exactly. Precisely. They know what will make a difference, but they just don't have any money to do it with.
No.
And I go through discussion after discussion with the various events, listening to people in all sorts of industries telling me their kinds of problems. It's always they don't have enough money, and it's because the money should be there, but it isn't. It's been grafted off somewhere else. And you and I were talking before the show, Charles, about a discussion that I was having with a doctorate who had just taken over a major high school. She's a psychologist. And she was talking about the problems she was having, and I was in the reference of Sandy Hook and the shooting and the incredible problems it was creating for her with fallout from students and teachers and everything else. But what I went away with was the staggering realization, as she pointed out, in her school, she has 15 to 20 kids who are totally and absolutely unmanageable, that are under drug medication. I mean, there are many, but who they can't even supervise, but they can't get them out of the school and into the proper environment because the state won't accept them. They don't have the money. So there's this continuous fight between the schools saying, take them, and the state saying, no, get a special education teacher. And meanwhile, every year, 15 more appear into the problem. I see it in, and I could go on, industry after industry. So we've got this, where the money's collected, and is being grafted out and spent on things that I just vehemently am opposed to. I don't think we need to have 600 military bases in every place around the world to this degree when we got 47 million people on food stamps. But we won't have that public discussion because the money will never get down where it's needed. Never.
That's right. It's controlled by a very tiny elite, and it's distributed to equally small elites.
And this is our whole discussion of the natural order of things we were talking about a few minutes ago. It's absolutely counter to the natural order. It will fracture and it will break because it's unsustainable.
Yes. Let's move to the next slide. What we have, this just is another sort of continuation of the point that when you have this upside down pyramid that you just described, where all the money goes to like a political elite, which then distributes it to their crony capitalist cartels, you get a system where we're pouring more and more money into things, like my example is healthcare, and yet the results of that spending are either diminishing or negative. Like by my metric, our national health is declining, even as we've doubled and tripled and quadrupled our spending. We spend twice as much per capita, meaning per individual American, on our health care, and yet we're not as healthy by most metrics as other countries that spend literally 50% of what we spend. And this is typical. I mean, we could say this about the military spending, about health care, about education, that we're spending huge sums of money and we're getting like a very poor return for the reasons that we just discussed. My next slide, which is what I call the forgotten balance of risk versus security. And one way to characterize this inverted pyramid that we've been talking about, where all the money flows to a political elite, which then distributes it to the most politically powerful cartels and crony capitalists, is that the government, the central state, has issued promises of permanent security. In other words, promising everything to everyone, right? We're going to take care of you when you get old. You're going to get a pension, and we're going to have 600 military bases around the world. And maybe we need 700. And the kind of promises that are disconnected from what we can afford and what makes sense and what actually yields a positive return on investment, that's been lost. And I call it like a seesaw or teeter-totter, that if you focus on security and you make promises of security and all you focus on is, I want mine and I want it a certain way, then you've lost the capitalist innovation mindset that generates real wealth and which looks at risk as a necessary component and rewards risk and rewards innovation. And if you eliminate risk and say, no, the government's going to pay for everything, no problem, no worries, then you've created a mindset which will actually destroy wealth. And I think that's how I see the forgotten balance of risk and security.
That's exactly what's going on. And we really confuse the role of the government. And everybody's natural feeling is they want security. But there's a trade-off with security. You give up your independence And in giving us security, there's this perception you start minimizing risk. And a society only grows when it's being innovative and creative, and that's highly risky. But it's only by doing that we can grow at the kind of rate that we're doing. And when you start to pull yourself in like we're doing, it's a real problem. And the problem is the more control we give to the central state, and the central state wants control. It's because they feel that with control, they can create order out of some level of what they see to be chaos or the unruly. The role of government is not to have control. The role of government is to be a coordinator versus a controller, because they confuse control with authoritarian. And immediately what you get is you get rules, regulations, licensing, etc. And what those translate down to is impediment, fees, costs, which are all take away from the innovation cycle. So again, we're fighting the natural order of things, Charles. These trade-offs that we forget. And you know, our forefathers that founded this country, I've got to tell you, we're geniuses. Either that or the problems are so easy to see that they could see them as clear as a bell. We have so much bad information, we can't see the trees for the forest because it's very, very clear. And these are the trade-offs that we're missing, and the expansionist central state will fail. It's always failed, and we're on a road to failing, but it just keeps taking on more and more power, more and more. Dodd-Frank, Obamacare. I mean, these things are 2,600 pages of complexity that still can't get implemented. And by the way, what they're implementing now is going to be obsolete because the world is moving at such a rate. You can't centralize these things. It moves too slowly.
Yeah, that's a very good summary right there.
Apologize, Charles, going on a little bit there. I guess I have a bit of a passion with some of the subjects that you brought here this morning. I interrupted you. Last comments you'd like to make before we close?
No, I think that's a very good summary, that the natural order of things is innovation, risk, decentralization, problem solving, and seeking a high yield on return of investment. And the central state is against every one of those.
We'll talk to you next month.
Okay.
Thanks for the time. Appreciate it.
Okay. Thank you, Gordon.
Bye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.